Hello folks, my name is Eric Wilkinson. Welcome to Pro Trader Strategies Market Commentary for Tuesday, March the 9th. I'm Eric Wilkinson, like I said, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how those come in to impact the markets with some of my market analysis. I'm going to do the same thing in these daily market commentaries, but I'm going to also talk about the option strategies I'm implementing into my portfolio based on those assumptions I come up with in my market analysis. And for you folks, we do all kinds of webinars that will streamline your process in order to find the optimal option strategy for any given assumption. If you got a bullish assumption, it's not always picking the long call for that bullish assumption. No, you can actually lose money even if you're directionally right if you set that up in the wrong way. So we talk about that in my daily in my webinars. So please check those out at protraderstrategies.com. Right now we're doing the roadmap to trading options. So a great streamlined process where you follow us down this path of finding the right option strategy for the given assumption we come up with ahead of that webinar, just like you would do on any given day. You come up with your directional assumption, but now we need to find what is the best strategy in order to take advantage of your given assumption. All right, so with all that out of the way, let's get on with the economic data and see how that's impacting the overall markets. We've got the Nfib, which is the National Federation of Independent Businesses. It's a small business index, which is a key driver for me as I like to look at what those small business people are experiencing, because that's really where velocity of money, that's where our economy is really created, is throughout these small businesses, because that velocity of money then filters out throughout the broader economies. Anyway, with that being said, it came out at 95.8, pretty close to inline, but slightly lower than expected at 96.7. So still pretty confident, not as high as we were seeing before the pandemic. Remember, during 2017 to the pandemic, basically, we were seeing these levels up in the hundreds. They dipped, and now we're starting to recover a little bit, but not nearly up near that 100 level that we were seeing the last 4 or 5 years. All right, let's talk about some other things that are hitting the market. Strength in the dollar is doing very well. We're seeing that across the board, stronger than we've seen before. It also looks like the $1.9 million stimulus package is going to be passed through and probably get those stimulus checks towards the end of the month, about $1,400. I think 85% of Americans are going to be receiving those types of checks, and the rest of the money is going elsewhere. But with that being said, a lot of these companies we've been seeing release earnings, and they've had really great earnings despite the fact that we've gone through this real slowdown in the economy. Well, they're probably doing very well because of these stimulus checks. And their forward guidance that we've seen has not been very good, and that's really caused some corrections in a lot of these stocks that have come out with better than expected earnings. Somebody else even came out with it today, but forward guidance is really pretty crummy. With that being said, the stimulus checks should start to reinvigorate this economy, as we're seeing a lot of that money get spent in different areas, as people will spend their money differently, okay? Some people are putting it into the stock market, and that's been part of that trajectory to the upside that we've seen. Now we're actually seeing this sector rotation out of the stay-at-home stocks, things like Zoom, Apple, all of those stay-at-home stocks, Nvidia, Adobe, have done pretty bad the last month or so, or about the last, maybe not month, but we've been starting to see this sector rotation, so it's probably been close to a month now. As a matter of fact, we'll take a look at deep dive into a couple of these stocks that are really affecting the tech sector. We can see crude oil is finally coming off. Hopefully we'll get back down into the 50s, right? That will help increase that velocity of money I've talked about. If you're not spending money at the tank or at the pump, then you are spending that money elsewhere, and that is good for the economy. Now, the equities are starting to get a bit of a rebound. Is it because of what we're seeing over here in the bonds? Well, the bonds are starting to make a bit of a comeback, just slightly shy of 1 full point in the U.S. Treasuries here. We were up a full point earlier, still below this 9-day simple moving average, which is going to show short-term weakness. We are below all of the trend channels, which is showing weakness across the board there. But a break above this 9-day moving average could get us back up into that 160 handle in the bonds. But at this point, it is still in a bearish trend here. Lower lows, lower highs, the whole 9 yards. We did get on Friday a bit of a bottoming pattern, not a confirmation yesterday, but today starting to peel that off, peel that onion back, and it's starting to look like it's a little bit more bullish here. And that is really due to the fact that the market is, I think, following the bonds lead here. We're seeing the dollar strengthen. We're seeing the bonds strengthen a little bit. That means that if bonds are coming higher, that means interest rates are going lower. The broader market wants lower interest rates for the most part here, and the market is pushing higher. We can see gold making a move despite we're seeing that strength in the dollar. Bitcoin again making big moves to the upside back into the 5,000 or 50,000 handle there. And the VIX is just slightly off. Dow Jones Industrial Average, after yesterday making a new all-time high, today trying to continue that winning streak. It is up 250 points, just slightly shy of the all-time high. We can see the NASDAQ making a nice move back 450 points to the upside. A lot of this being driven by Apple, Tesla, making some moves to the upside after they've had some real serious correction, and that's been really driving the NASDAQ down. Part of that whole tech sector. NASDAQ is tech-centric. If we're seeing a reopening trade, we're going to see things in the tech fall off as the rest of the broader markets and blue chips and undervalued stocks for the reopening trade is going to start doing very well here. E-mini S&Ps at the highs of the day. You can see up 68 points on the day, and another print here as we can see the highs printing during the day. Almost unabated strength overnight and into today after yesterday's late day sell-off in the equities. We're still looking pretty strong here across the board as we're seeing these points of control now, where we were seeing those points of control start to weaken and come in a lot lower. That signals weakness. Now we're seeing those points of control a little bit higher, being prices accepted at higher levels on any given day. That is a very strong bullish trend there. As weak as the weak trend was on those points of controls going down. Now this is what I was talking about with Apple, and we can see that this has been a big driver of the equities to the downside, and we can see that if we drew this up, I mean, almost down 20% from the highs that we saw here in Apple. A lot of that is going to be that sector rotation happening. So Apple off a little bit there. And with Tesla, if we take its high down to the low, we can see that that is almost a, I'm going to have to, let me squeeze this down just a little bit so you can see it. But we can see that that is better than a probably 30, almost 40% correction there from those highs that we saw there right around 900, now trading around 600. That's pretty darn close to a 30-40% correction there. So Tesla has had a big move to the downside. That's been dragging down the NASDAQ. But again, just to show you, basically Tesla, Apple, and if I throw in, I think it's PayPal, that's 17% of the NASDAQ. So all of those stocks really seeing some weakness as you know, like the PayPals, the Squares have done, had seen some weakness. Now, you saw me add Square yesterday to the portfolio. That's actually doing very well today, up nicely. After yesterday, I was kind of eating crow with this market selling off even into the very end of the day. But you can see we are up nicely today by about 10% in Square, so making a bit of a rebound there. Some of these stay-at-home stocks have done pretty crummy, not going to lie, but is that the time to start taking advantage of it? As a matter of fact, I'm trying to rejigger some of my portfolio, especially in my long-term IRA, to maybe add some Apple in there. I don't know if I'm going to add Tesla. It's a big margin hog, and you know, I don't love Tesla anyway. As you guys know, I've lost a lot of money shorting it, and That's one of my stocks that I put over into this side. It's in jail, if you will, where I'm kind of keeping myself from trading Tesla for a little while here. All right, until I get less emotional about my directional assumption in Tesla, which is generally bearish and been very wrong. So I stayed away from that. But having said that, Apple, I might get into that for a long move here. As we can see, it looks like, as we can see, it's starting to make a bit of a move here. Yesterday, no confirmation of a bottom after Friday's bottoming pattern yesterday, kind of erasing that. But having said that, there is no real chart set up for a bullish move necessarily at this point, but we're right there at the point of control where the most time and volume has been spent. That is a magnet. To me, that would be a good place to start getting involved in this trade. I'm going to be possibly looking at selling some cash secured puts in here for my IRA and maybe some other short puts in my other portfolio. Why? We're looking at low implied volatility here, right? Well, you might be saying, I'm following your rules, Wolfman, that doesn't necessarily fit the agenda of selling premium in a low implied environment or low implied volatility environment. But keep in mind, I said cash secured puts, which means that I want to add this to my portfolio. So I'm not necessarily as concerned about volatility when I'm collecting that credit. I'm actually more concerned about trying to find a location where, with this pullback, I can get great strike location for a stock that I might want to add to my portfolio, so I can pick and choose where I would want to put it. If you're putting in like a bid, say for instance, in Apple, you would say, hey, I want to buy Apple if it breaks down to maybe this Fibonacci. This is a place where I would put my bids on the exchange. Well, I'm doing similar to that, but I'm selling puts at those levels and collecting a credit. So I'm getting paid for taking my risk rather than just putting an open order out there where you're not getting paid for your risk that you're incurring by putting bids into the market. So with all that being said, looking to add some Apple to my portfolio because I believe that this correction in some of these major tech stocks is over, and we're going to start seeing some rebound in here as people find the pricing for things like Apple very conducive to add to a portfolio, especially when they're right there at the point of control. That's a nice sweet spot to get involved. And if you can get involved on an overextension, that's even better, right, folks? All right, so that's all I've got for you guys, other than please take a moment at the end here to go over our disclaimer, as we're an educational company. I'm not trying to solicit you guys. I'm not trying to get you guys to jump on board with my Apple trade if I do an Apple trade. But what I am trying to do is teach you guys how we stay mechanical and trade options around our portfolio in order to increase that yield. The best way to increase that yield in your portfolio is to be trading options that will end up beating the benchmark if you are playing it correctly, like I talk about in my webinars. So please check those out at protraderstrategies.com. And if you can't take that, take it easy.